Righto, Todd, Mr. 2050 Warren, you'd say. Tribeca, welcome to our humble abode, mate.
Thank you for having me, very flash.
Yes, give you a break from the bloody conference, mate. Come and just let you repeat everything you said today. Tell us about this, the 2050, you're running you'd say the decarb side of things for Tribeca. How long's that been in motion for?
Yeah, we launched that in 21.
Yeah.
And it was really an offshoot from our broader resources strategy. I mean, we were finding that within the resources fund, we were more and more seeing opportunities in the decarb enabling commodities. So there was obviously an opportunity to provide a focused strategy around that, but then also to broaden that mandate into other areas of decarbonisation focus, which people are not really focused on. So we do a lot in the food and ag tech, down into the commodity side, which is more soft commodity than the hard commodity or oil and gas, and then into some of the more esoteric areas that it might be, the hydrogen space, but into the earlier stage, which we might not get into in resources. So
I guess since 21, in terms of decarb, holy shit, there's been some changes.
100%.
What decarb would look, what 2050 might even look like, or what is actually probably the definition of decarb in that period?
Well, mate, the narrative has completely shifted, right? Yeah. So, I mean, obviously, the challenge we've faced in that whole space is when the tanks rolled into Ukraine, then to some degree all bets were off. Because suddenly, particularly in Europe, where they had gas prices go through the roof, you suddenly had this real arm wrestle between, the Europeans having that longer term decarb desire, wrestling with, that oh crap, this is going to cost us an absolute fortune. And meanwhile, it's costing us a fortune just to keep the lights on and the house warm and food on the table because of what's happened to gas prices. So there was that real arm wrestle going on. And then around the world, you've obviously got the politics has entered the fray as well. Obviously, what we've got going on this year in the US is going to create a lot of noise around that as well. Carbon pricing has gone through quite the roller coaster. So we've had quite a lot of headwinds, frankly, thrown at it, and interest rates going up, yields going up, costs a lot more to install your renewable energy array. So that's put some real question marks over it.
Todd, we've sort of spoken quite recently about the sort of change in perception around EVs and the push and everything that's happened in lithium lately. Can you speak to how you're seeing things in terms of perhaps the demand for hybrids and how that sort of perked up a bit, how EV sales might not be growing at quite the clip they were in the past couple of years?
Yep. Well, part of the EV discussion obviously comes down to affordability and to what I was just talking about with regards to what it's going to cost to decarbonise. At the end of the day, EV policy is what will drive the demand for EVs and whether there's incentives to buy an EV. Obviously, the Chinese are the biggest producers and consumers of EVs, so what happens in China is a big swing factor. Outside of China, you've seen the price of EVs remain somewhat stubbornly high, and if you don't get any government subsidy to buy one, then there's a challenge. The point around hybrids is around that range anxiety issue. Now, in some markets, that's more relevant than others, and we've seen a bit of a resurgence in the demand for hybrids, and you've seen that in the sales data. Frankly, around the world, but certainly in those markets where there's range anxiety.
Is it a trend you think keeps going forward, or have you got a view on that?
Without meaningful government subsidy remaining in place, yes, I think it stays. Look, at the end of the day, it's a bit similar to the whole discussion around energy, power generation, where we're going to get that from, why are we going to see, coal remain for longer, or maybe the next step to that, why gas remains for longer, because it's costing us more to put our renewable energy in. So it's called an energy transition, it's not called an energy switch. And the same applies in on the road.
Because there's definitely a mismatch between the ambitions of decarbonisation and then actually putting that in place, and a lot of that's around cost, and even like you say, the cost of even just doing what we're doing now is getting expensive. How do we actually achieve these things? Like, what do you see as like a catalyst or something that needs to happen to actually make these ambitions a somewhat a reality? Because everyone likes to say they want to decarb, but then, it's very expensive.
Yep, totally.
Can pitch the uranium fund now.
Yeah, that's right. Look, I mean, the bottom line, and it's the same for everybody. It doesn't, like, we can talk till we're blue in the face about how we want to decarbonise, but the bottom line is as you say, the cost. And we won't decarbonise. No one really ultimately will do anything unless there's an economic, driver of doing so. So that hip pocket imperative, we can talk to a blue in the face about how altruistic we want to be, but until it's actually, going to cost us too much not to, most of society won't. So whether that's through government policy or the simple cost of an EV coming down through cheaper materials or efficiencies or whatever it might be, bottom line is the hip pocket imperative.
But what about if you can get a BYD for 10 grand US and every other brand's triple? Like they're going to have, that's given so much bloody power to China. If it's imposed on people, like, well, I'm going to buy that because you can't buy really second-hand ones yet.
Yeah, well, that's a whole other discussion. That obviously the second-hand market and what's the resale value. But yeah, spot on. Like the Chinese are coming. The Chinese vehicles are coming. And you think back,
and that's profitably. Who was it? Matt Fernley said 10 grand US is profitable for BYD, which is phenomenal.
Yeah, I'm sure you guys have seen. There's the clips, and whether Elon Musk regrets it or not, but him pointing, laughing, joking about the quality of a BYD not that long ago. And they're here. And, you see them more on the streets out here in Sydney. And it's not just in Australia, they're all around the world. They are coming, and they will incentivise people to go and buy an electric vehicle. And
I haven't heard anyone that's driven one say anything about poor quality. If not, I've heard they were equal, if not better than a Tesla, which is pretty unreal.
So that kind of leads into nationalism of industries. There's a huge nationalism of the auto industry, in particular in Europe and China. There's massive tariffs on importing Chinese vehicles into the US. But to talk about nationalism in the sense of commodities at the raw materials level, we've started to see that quite massively. Chile has ramped up their taking of lithium projects and whatnot. How does that play into your decision making in over the course of this fund, really?
Well, there's a couple of things going on. Obviously, the somewhat strangely named Inflation Reduction Act was which is ultimately going to be inflationary. It was designed to obviously bring capital into the US and obviously try and reduce that reliance on China. Couple of things. Number one, how quickly they can deploy that capital, but also the types of activities they were incentivising, primarily downstream and not mining, which is a challenge in and of itself. But that sucking sound you can hear was capital actually being drawn towards the US. And then that sharp intake of breath was every other country around the world going, oh crap, because we're going to need to do something the same. So obviously the Europeans been quick to follow. And now you've got, countries all around the world, including here in Australia.
It's in particular that the ally countries that get hit hardest, because it wasn't the Chinese that were going to do it otherwise.
That's right. So, I mean, the ultimate end game here, I don't actually think is achievable in terms of reducing meaningfully our reliance on China. I actually think we're going to have to play nice because they are so far ahead of the game in terms of their build out of their own industry and their domination of many of those commodities. But what it will do is it means that there is going to be a strategic angle to assets, but also there's that carbon intensity curve that, where we used to talk about, the crowded first quartile of cash costs. You're going to see companies more and more try to point to where they sit on that carbon intensity curve.
Yeah, we were speaking about the most recent earnings call from Ivanhoe and Robert Friedland, and that was a huge point. He was, comparing Escondida with Kamoa-Kakula in the DRC, and he said 100% we will see a bifurcation in prices on the basis of the carbon intensity. Do you think that's something we're also going to see?
Yes, without a doubt. I mean, the question is when.
Yeah.
So from an investment perspective,
Yeah.
when can we actually see that reflected in companies' earnings and share prices? And there was an initial surge of interest in that thematic. You go back sort of a year or two, and then it's sort of all gone quiet. It has started to raise its head again now. You've got the carbon border adjustment mechanism, the CBAM in Europe, which is sort of that first hard protectionist layer that is designed to address some of the carbon impacts. And you're starting to see, interestingly, like areas like steel in the US and that sort of green premier.
And aluminium as well.
And for Ali, yeah.
What do you think about Southeast Asia? There's a couple of things that happened. The one thing that happened last week was that investment into Ardea, which should have a good chunk allocated to WA water bores. Yeah, Ardea, you've got the coin in the door from Japan.
Is it in the door?
Oh, it's coming.
Right.
It's probably coming.
Yeah, any minute.
First border call, once that comes through the door in the big bloody suitcase, you need bloody water. JD, you know that. You're going to need a shitload of it, which means you've got to find a shitload of it, which means you've got to set up a shitload of monitoring bores and set up a bloody massive bore field as well. I'm sure there's plenty of mobs that do it. There's always someone that will do it cheaper, isn't there?
Is there?
There always is, mate, but you
Here's
want
an
the job
example.
done properly.
Here's an example. You check on YouTube, there is always someone that can do it cheaper. But you get WA water bores, you guarantee it's frickin' done right. Right. If anyone else next week gets any money from Japan or South Korea, take action. Ardea, I hope you're listening to me. Take action and flick that cash to WA water bores. Right. Water is the undoing of any project. Not if you got James on site. A significant investment. And is there something possibly shaping up where to get away from China, there's going to be these relationships built with the ASEAN nations, the Australian, Southeast Asian nations?
Yeah, I think so. I mean, it's funny how governments will need to be pretty pragmatic, right? And how the language changes. And you think about, initially, Indonesia, case in point, obviously with nickel, and how that entire nickel landscape has shifted because of, the production coming out of Indo, where that was originally seen as, coming back to the point about carbon intensity, that was seen as dirty because it's coal-fired power, essentially. Now there's conversations obviously happening around Indonesia being brought into qualifying for IRA credit, and I think that will continue to occur. Simply coming back to trying to reduce that reliance on China.
Yeah, and nickel's an interesting one. I know, probably because there was the double whammy with Indonesia and then the rise of LFPs, which nickel and it obviously burnt you guys and probably rare earths did as well. Are you still, what's your view on nickel and rare earths from the investment perspective after what it's done? But it's such the environment just changes so quickly. Yeah, it seems a shitload harder to predict now than it might have been. You thought it might have been 3 years ago.
Yeah, well, I mean, obviously nickel, that was always coming back to the point about timeframes and when can you make money out of this. Yeah. Nickel, as you guys well know, the key drivers are not batteries. That was the growth factor, but stainless steel is still the biggest driver of nickel demand. But that massive acceleration or the rate of supply increase that happened in Indonesia, I think caught everyone by surprise. Going forward, are we through that sort of glut? No, not yet. And it's hard to say that we're really in a pin your ears back and buy it environment. But we're getting closer. We're closer to the bottom than the top.
What sort of nickel would you be looking at? Like, I suppose you think you compare the ones that have gone bust in Australia, like your panoramic, which is always going to be difficult because it's deep, historical. the Wailu asset's pretty high, arsenic in areas, and the Cassini one. First Quantum, obviously a laterite project, but where is it? It's obviously hard to find like a real high quality, like Centaurus comes to mind for me, just in terms of it's only a study, but it looks like, well, this project, the scale of it probably could survive in a shit nickel market, whereas we've seen the Australian ones can't.
Yeah, they are structurally higher cost. Well, they have been moved up the cost curve as the entire cost curve has led down. Because you think about that shape of that cost curve, it had all these new tonnes added in the, I was going to say first quarter, it's really the first half, of the cost curve. So without meaningful change, it's hard to see a lot of the Aussie sulfides, where we sort of saw those as the go-to nickel exposures really coming back into the equation until nickel goes meaningfully higher.
Because they were thinking it was going to be, $12, $15 a pound and things
That's
like
right.
that.
That's right.
And I know we talked to Luca and Joel at Wailu, and they said, we'd take 9 forever. And even though it is creeping back up to that, but obviously they've obviously, I would think, used this as a bit of an opportunity to detach themselves from BHP. But how long they take to actually build a concentrator and get back into it, it's who knows?
No, totally. Well, and then it'll also come down to, is there a strategic angle to it? Well, we'll soon find out what BHP are going to do with Nickel West.
August, I think they said. Yeah.
On the BHP side of things, have you got a view on the Anglo transaction?
Yeah, I mean, it's opportunistic, as we all know. I mean, Anglo's been a terrible performer, and a lot of Anglo shareholders would be very welcoming of the approach. As far as BHP goes, it's actually nice to see them doing something somewhat counter-cyclical than pro-cyclical. So that makes a nice change as far as big miners' action.
Probably 2 in a row, eh? Oz Minerals was probably was even more counter-cyclical.
Absolutely. So you think about when they did that deal, implied copper price of, let's call it 350, give or take, and everyone thought it was expensive. Well, 350 seems like a bargain right now, doesn't it? So the copper is clearly the jewel in the crown for Anglo.
Bloody hard way to get it, isn't it?
All
the shit they got to do.
I think someone described it today as buying a 6-bedroom house just to get the garage.
But it just speaks to the copper market, right?
100%.
Yeah.
And what price on multi-generational copper assets?
Yeah.
So could they get that sort of copper exposure elsewhere? Well, I mean, there are some decent copper mines out there, but these are assets that have got 70, 80, 90 years of mine life.
Yeah.
That frankly make Escondida look a bit average, despite its size.
And that's the thing. I mean, there's not many new ones coming online. No. Inventories are super low. Do you think this is a sign? Obviously, BHP's sort of showing their hand a bit, but more broadly in the copper space, where it's just going to be people doing more M&A to get their hands on copper supply, because at the moment it's probably cheaper to do that than discover or grow their own.
It doesn't look like they want to build. That no one wants to build anything of scale at the moment.
No. Well, it's cheaper to buy than build, without a doubt. You think about the historical rule of thumb was the 7 to 10 years from first successful drill hole to first production, and that's probably 15 to 20 now. In fact, that's an Anglo number.
That doesn't speak to the miners not wanting to build, though. You've got regulation, approvals, everything. It's not that they don't want to build. I think
So you've got obviously the hoops they've got to jump through to get a mine out of the ground are so much more difficult to get through now, or the bar is higher. Shareholders have told these management teams and boards that, sorry guys, you are shit allocators of capital, and let's be honest, they're right, or have been, to a large degree. And so they've told them, whatever you do, don't put your money in the ground. So shareholders have had this impact. Capital markets have had the impact. And so now you've got a situation where if you're a board or a management team, why would you approve a project when you don't know what, when, crikey, look at what Tech have just gone through with QB2. You know, it's cost masses of amounts of money, more, it's taken way longer. I mean, you know.
And then it feeds into itself though, because I think in one of your presentations recently you mentioned how CapEx and exploration spend is just coming off of a cliff. But then, we want a copper project. But it's like, well, you can't get that if you don't. So it's just a vicious cycle.
It is. And this, you know, this has also been the conversation. We've been feeling like we're screaming into a vacuum to some degree on copper for quite some time, talking bullishly about what's going on with regards to the whole setup on supply and demand. And frankly, it's a bit, you know, whether we pursue or achieve anything close to our decarbonisation desires, we need so much more copper and it's not coming. So, you know, it's only been more recently that someone sort of went, oh, hang on a second, AI, power, copper, you know, and that's what sort of dragged everyone's attention to copper, despite the fact that this has all been building for a long time.
Do you think we'll see a Glencore or a Rio compete?
There's certainly logic to Glencore getting involved.
Do you guys want them to, but on the activism trail at the moment?
Look, you know, again, you know, there's logic to them being involved. You know, we have a very good relationship with Glencore, and I would be very surprised if they weren't looking very, very closely. I mean, someone said to me, you know, like they're not going to do it whilst they're still trying to, you know, complete the Elk Valley coal acquisition. These guys are they're deal pros. Like they do this stuff in their sleep. So I don't see that being a reason not to do it or why they wouldn't do it. From a competition perspective, obviously everyone's drawing parallels with what Glencore and Xstrata went through and where the Chinese got involved from a competition perspective. BHP's view is that they don't see it the same because at that time it was all about the control of concentrate and traded concentrate as opposed to just produced concentrate. And whilst this is notionally going to be, for round numbers, let's call it 10% of the copper market when put together, they don't control, you know, a meaningful amount more in terms of the traded concentrate, which is what Glencore and Xstrata did. At that time as well, you had the Chinese smelter industry was heavily fractured, and now that's become much more concentrated. So they've got more bargaining power when it comes to that side of the equation. I think the reality is that Chinese will definitely stick their oar in. It's just whether they play tough footy or not.
Well, I think it's the interesting thing about these porphyries and how the permitting landscape's changed so much. Like I think it's going to be difficult to get big, massive open pits approved, like for these for operations, and like, you know, underground costs a shitload more. Kathleen Valley is probably the best example. Like 20 years ago, that just would have been a big, massive open pit. But the only way they got it over the line was to make it an underground and higher costs. So and I think that's the footprint of these friggin' porphyries. It's going to be, I think that's a big factor there. Like, let's just go get something that's already approved and pit, and we can mine it at low cost instead of building a brand new massive freaking block cave or something.
Well, that's right. The other one, and this comes back to the point about buy versus build. You know, they've obviously, BHP have got an interest in phyllo mining now. So you think about other big copper potentials, copper plays, and that's a district play, like that whole Vicuña district. The only problem is that it straddles a border. So and it would be a whopping big open pit. But, you know, the prize there, phyllo, NGX, Lundin mining, you know, that's something that clearly they're also looking at.
Do you reckon if Ryan O'Sullivan's children started getting into mining, the term O'Sullivans will start ranking with the Lundins?
Multi-generational credibility and mining entrepreneurship guaranteed.
I think so, because, look, we've seen what Ryan O'Sullivan's done with K-Drill. Mate, they're just spearing fucking drill holes in everywhere these days since he's come on board.
100% success rate of finding something.
Yeah, and like 110% success rate of drilling a hole. The Lundins all like that that they started somewhere. I think Ryan O'Sullivan via K-Drill I think he's officially started his rise towards the levels of the Lundin family, probably even like Friedland
Lundin,
level.
Friedland, and O'Sullivan.
Yeah. Because
The
I
three
think like,
names to know.
Ellison, Forrest, Reinhardt are just like, they're just going to be a bit of a small obstacle that Ryan O'Sullivan has to hop over on his quest towards global dominance.
They don't have that. They don't have that trusted brand value that
Nah.
O'Sullivan's carries. You
Nah.
just trust that.
Nah, and because if I don't think anyone's ever said a bad word about Ryan O'Sullivan, and if they did, and he was within the vicinity, I don't think it would have ended it too well for them.
They'd be road killed by the K-Drill man.
Yeah, so look, MDs that are listening, if you engage K-Drill right now, you'll get to deal with Ryan O'Sullivan directly, and in 10 to 15, 20 years' time, you'll be able to, make yourself look good in front of your mates and do the old name drop and say, oh, yeah, I gave the O'Sullivan family a contract back in the day. Everyone does a name drop of a global leader, so give yourself the opportunity to name drop Ryan O'Sullivan in the future. Get K-Drill.
Yeah. What about you? Are in Freeport, aren't you? Yeah. Are they probably just a bit out of their scale to get involved in something like this, or what's I guess their sort of growth strategy?
Well, I mean, from a sheer market cap perspective, what's Freeport today? 70 odd billion
So it'd be
US.
a pretty
so
similar
it's actually,
merger. Yeah.
Well, in terms of EV, I think it's probably about 50% more than Anglo.
Yeah.
Which is, you'd never think that'd be the case, right? But it is, and part of the reason for that is because they've delivered on everything they said they were going to do. Like, they've had a tremendous run of delivering or hitting their numbers. In terms of growth, they don't have a huge growth trajectory in terms of their portfolio. They've got optionality within them. They've got big long mine lives, and obviously the life at Grasberg and indeed exploration around Grasberg.
Oh yeah, you can only imagine.
Is spectacular, right? Now, do they want to meaningfully increase their exposure to that geopolitical environment? Maybe it might be pushing the barrow a bit far, but
tough going over there. Yeah.
They've had their issues, right? So,
Just built the biggest copper smelter in the world.
correct.
Yeah.
And they're going through their own management change as well at the moment.
Yeah.
So you've got Atkinson stepping down. So it'll probably be a surprise, I think, to see them enter the fray. They could do it from a size perspective, but do they want to do it?
Funny story about Grasberg. It was at the pub, so it's definitely true. But talked to people that work there, and they said if they had a mill shut down, because they just pump the bloody, I think the tailings just go straight into the bloody river, but then the locals downstream pan the river for the gold. So when they have a mill shut down, if the shutdown overruns, the locals are like up at the fence with bloody machetes and everything, like turn the bloody thing back on. Like she's a bit different to the Murchison in WA. Put it that way. Mate, but was uranium part of the decarb fund, you'd say, at the start?
Totally.
And definitely more so now about what it's actually
Totally.
the pace that's happening.
Again,
possibly.
one of those sort of screaming into the vacuum things. When we launched that fund years ago, no one gave us a time of day.
Yeah.
And those first couple of years were pretty tough footy, frankly. But it's gradually, that whole narrative has gradually swung around. You've got more and more governments around the world who are recognising that they're not going to achieve anything close to their decarbonisation goals if they turn off their nukes or don't embrace more nuclear power. But sadly, and here in Australia, the conversation's become sort of a bit Ford and Holden. We can only have renewables or nuclear, not the two. But governments around the world have recognised that we've got to have every bloody electron we can get our hands on.
Yeah.
And nuclear is obviously a very carbon-friendly way of doing that.
It's what's the strategy like? How do you approach the uranium thesis at the moment in terms of probably an exit from the trade, because it could bloody historically it can go just freaking off its head, or bloody,
it has done,
and it can, and it does it very quickly, and then can quit. Who knows? But how do you approach it?
Well, it's a relatively small sector, right? So, and I think that's where you've seen big blow-offs, because you get an amount of money trying to squeeze through a very small door, and it's pretty hard to get exposure. And again, you think about how many producers of uranium there are. You don't really have to take your shoes off to count them.
No.
Now, with regards to the trade, it's obviously run, and we've had some pretty big moves in share prices. But, well, compared to previous cycles, we're not, in that same realm. And the market is actually a lot tighter today than it was, if you go back to 2010, 2011, when we had the previous run before Fukushima hit and everything went no bid. So, we've got a market, think about it in terms of other commodities, in particular whether it's the lithium trade, and people saying, lithium, the demand growth is all new growth and it's all coming. The picture on uranium is that, we've got a market that's been in deficit in the past, current and in the future. And again, to the point about where's the supply coming from, the biggest producers, Cameco and Kazatomprom, are short pounds. So I don't know, what are the numbers on Cameco? I think they sell
they were down. They said they were going to buy £2 million and they bought 1.5 already.
That's right.
For the year,
so,
just in one quarter.
So when they're scrambling for pounds, and the Kazakhs, can't get their hands on sulfuric acid, so
and that plant's been delayed another year.
Correct.
Just but they have to buy it out of such a thinly traded market, the spot market.
That's right.
Which is like, I know a lot of no one really talks about the term market because they're like, I can't trade the term market.
they don't watch it.
But it's obviously the main driver of how it works.
That's right.
But it's like then that spot market, which is why spot's so interesting. Correct. It's just all based on how it's going to trade to that NAV of that spot price. It's fascinating. Yeah, you can tell I bloody don't mind it. Ding, ding, ding. I hold a bit of spot.
Todd, you also hold Energy Fuels in the States, and they did a recent transaction a couple of weeks back with Base Resources, which was a bit out there. Mineral sands on the one hand in Africa, Madagascar and whatnot, Kenya, and then the works in the US. What did you make of the deal to start with?
Energy Fuels has been a somewhat frustrating story, mainly because it's heavily followed by the retail space, particularly in the US, and where it was seen as a uranium play. They are trying to diversify their revenue streams, and the reason they do that is because they've got one of the only fully permitted operating mills in the lower 48 of the US. Now, because of their licensing, they can process radioactives. And so rare earths then enter the equation. So they can process monazite for its rare earth content. Yeah. And because monazite often has uranium and thorium in it, you need certain permits to process monazite. Now, trying to get your hands on monazite is a challenge. And so where their narrative obviously was, we can do uranium, we can do rare earths, we can do vanadium all through the same mill. And that made a lot of sense, and got the market interested when rare earth prices were doing what they're doing. And then, you've had your rare earth prices roll off, and they've struggled to get their hands on monazite. Now, the whole Base transaction is all around getting access to monazite through the Toliara project in Madagascar.
So it confuses the story to investors, but potentially you're picking up like a company at a sort of counter-cyclical moment.
That's right. I mean, their biggest revenue driver is still uranium.
Yeah.
And so they'll still be able to produce, they just put out their numbers on Friday, but 2 million pounds of uranium. They've got a net cash balance sheet. They've got stockpiles of actually all three products sitting there. So their balance sheet's fine. They can actually build, assuming the Malagasy will let them do it, what could be it's a great mineral sands deposit, but there's been some issues in country.
Yeah.
And that's where Base share price is obviously taken in the neck, obviously as Kwale is approaching end of life. So I think in terms of building a longer term investment proposition, it makes sense. It's just, it's muddied the waters for investors in the immediate term.
Yeah.
As far as actually more broadly playing that decarb and energy transition space, do you see more value or leverage in the small cap end or the larger end, or do you play a bit of both in the fund?
Yeah, we play a bit of both. We've had that luxury of playing both large and small ends of the spectrum. We think about the portfolio more from like a barbell approach. So at one end of that barbell, you've got the big caps, the big stuff that you can come and go with relative ease. You can move your portfolio around with ease, and it's the beta to the market. The other end of that barbell is the small caps, where it's very stock specific in nature, and it's the alpha side of things.
And how do you sort of weight them?
We have, when we started the fund, it was quite small. You have more of the smaller caps, and over time, gradually look to transition that into the larger caps. And the other side to that equation, and what are the considerations, is what the market's doing. So when you think about how, and this is all markets, but it particularly happens in resources, when you get, like this, as specialists, we're always in there. So we're not the marginal dollar moving this market up and down. It's the generalist who decides, I've done awesome out of my Magnificent Seven, maybe I should be looking at resources stocks. And so it's that marginal dollar that comes from another sector and enters the resources sector. Now, at that time, it's going to be the large caps that move first. And that's sort of what we've seen, recently. You think about the copper trade, it's actually the big names that have really run very hard, or at least are in production. And then as the rally extends its life, that's when you start to get more players enter the market, and that love comes down the size spectrum.
I want to touch on a couple more commodities while we've got you here, Todd. Lithium is the one, and I want to dive straight into company specific, touch on Liontown. They were the superstar 18 odd months ago. It's been a bit of a tougher journey lately, and they're building the thing right now. Have you got a view on whether they get through that? The financing is sort of signed, not quite signed yet. What's your thoughts?
They're not through the woods. It's probably the bottom line. They've just had as you probably know, they've had a site visit ongoing. So a bunch of the sell side guys have been out there.
Wonder why that was, eh?
Yeah, who would know? What did you say about funding?
Well, I mean, they sign, the big deal, it falls through, they get, not quite what they wanted, and only for a year. Bullet payment end of October next year, off the top of my head. How do you think that sort of plays out? Do you think the bankers just sort of sit and wait, and then in a year's time we're having the same conversation again?
Potentially, yeah. I mean, that's, as you say, I mean, the bankers sort of extending a bit of rope and seeing what happens.
See what they do with it.
Seeing what happens with the lithium market. And if lithium price recovers, to be fair, it's stabilising, and there's certainly signs of life. It's all the cards sit with the bankers in that situation.
Yeah. And are there any other commodities you're particularly excited about that we haven't quite touched on? Maybe a bit of a contrarian view you've got at the moment?
Well, I mean, we didn't play much in the lithium space on, really, that sort of last blow off. We got out, we thought it was getting silly, and then, the market fell out of bed, and, thankfully we didn't lose our shirt in that. Now, we were getting asked the question, why weren't you short in that environment? And the answer is really M&A risk. And, crikey, I mean, who saw Azure coming, So,
Wow.
that was quite spectacular. But then, one of the biggest trades from a pair perspective that we were getting pitched was go long a producer like Pilbara and go short a developer.
Liontown.
Like a Liontown, and then you've got M&A risk. So, and long a producer didn't work either.
It could have gone both
100%,
the other way.
that's right. So both sides of your trade.
Gina could have come in, and then bloody Pilbara could have lost money.
And that's the thing. So when you've got long data or long-sighted money, thinking very strategically about these assets, you've got to be very careful about those sorts of trades. Now, where are we today? And to answer your question, we think lithium's looking more and more interesting. Now, do you pin your ears back and jump in with both feet? No. I mean, there's going to be, the market's, it's had its blow off, it's come all the way back, and now we've got a rebasing going on. It obviously is somewhat subject to sentiment around EVs and the excitement or otherwise there, but you've seen that whole trade, related to those battery metals, whether it's lithium or rare earths or graphite, they're all sort of trading on the same sentiment. That does interest us. The graphite trade, everyone, all the other graphite producers are desperately hoping that Syrah works, because if it doesn't, you'd argue
Good luck.
none of them are going to work. So, that's also interesting to us. The other one, and it's the constant pushback you get on fossil fuels, and can you still make money out of that end of the spectrum? And we would argue absolutely. Now, obviously, I'm heavily involved in the decarb side, but as I say, that's why I said it early on. It's an energy transition, and as we've seen with thermal coal at its time, and met coal is actually now just sort of seeming to get a very strong bid, and that forward curve's drifting up. Why? Because there's new buyers appearing in that market all the time. So that looks pretty interesting. And you got when Whitehaven doing deals to buy the crumbs that fall off the table, maybe there'll be more if BHP get Anglo.
Yeah, we've also got playing out potentially BlueScope to come in with the deal with Gear and M Resources coming off the back of S32, which is an interesting one.
100%.
I've just got one more on the lithium. Were there any sort of distinct lessons learned from the way the market came off, or is that just commodity cycles and how they work?
Yeah, it's an extreme example of the latter. I think realistically, like when the commodity price goes to that level, and you have no rational way of explaining why that is when the entire cost curve sits at multiples beneath it, that doesn't make any sense. And also I think what it was a pretty stark reminder that you can bring quite a bit of lithium to market if you need to pretty quickly. All that low grade stuff, examples like Core, which came to market really quickly, but it's pretty tough footing ultimately. So the funny thing is with lithium, we've actually seen previous bull markets like that in lithium, and weirdly it's actually been isolated to particular countries. So we've seen the Canadian lithium market have its boom and bust. Now we've had the Aussies do something similar. That won't be the last.
Beautiful. Appreciate you making the time and coming on Money of Mine, Todd.
Thanks for having me.
Bloody good, mate. Thank you very much. Hopefully we went over a little bit, but that's bloody. Hopefully it was worth it. Cheers, brother.
Cheers.
Thanks.
Right, I love your work, Toddy Warren. Go the Seagulls. He's from the Northern Beaches. I knew he was a GC. Righto, thanks to all the partners as always. I'm going to bloody rip through them here. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Waterboards, Brooks Airways and K-Drill.
How are you, Spark?
How good's Spark?
Love Spark.
Watch the Spark YouTube video. Get Spark. Get Spark. Get Spark. Hootaroo Money Miners. The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.